Getting rich with debt, also called leverage. Hey everyone, it's Wolfgang. So some people use debt to build wealth, to get rich. I want to talk about that because there are a lot of examples, including examples online, who are sort of promoting the idea of using leverage, using debt, borrowed money to get rich, other people's money. What are the pros and cons of that? So let's dive into this. Let's think about real estate first, and then I'll give an example of using debt to buy stocks. Okay, so there are some real estate investors who are trying to set an example of using other people's money, borrowed money, debt, also known as leverage, to get rich. Robert Kiyosaki, Grant Cardone, Logan Rankin, a bunch of people online. And is leverage a good idea? Is borrowing money to get rich a good idea? And I don't mean a good idea sometimes. I mean, as a general rule, in all conditions, is borrowing money to get rich a good idea? So starting with Robert Kiyosaki, in 2023, a couple years ago, he said that he owned, in an interview, 12,000 properties. A year later, he had increased his holdings to 15,000 properties. That could well mean rental units. So he increased his holdings by 3,000 units in 1 year. And during that year, interest rates were quite high. In 2022, they spiked up quite a bit. Interest rates shot up. So he was borrowing money to buy a lot of additional properties over the course of a year. He was borrowing at peak interest rates, 2023 and 2024. And in 2024, he stated in an interview that he's in debt $1.2 billion. He also said that if anything goes wrong, he is too big to fail. In other words, he will be bailed out. I'm not so sure. That seems like an unsafe bet to make. His thinking is the banks won't foreclose on all those properties. They'll let me keep them and they'll renegotiate the terms of the debt. I'm not sure that's a reliable bet to make. A decline in rents, if you're heavily indebted, if you're using a lot of debt, a lot of leverage, as a percentage of your assets, if the amount of debt that you have compared to the payments, the loan payments, if rents decline, it becomes harder to pay back the loans, the monthly payments. Couple of examples of when rents dropped. During COVID, a lot of people, remember when they shut down the economy and a lot of people were out of work and not paying rent? Try paying your loans when your renters are not paying rent, right? So that was an economic shock. Another economic shock occurred in 2008, 2010, the great financial crisis. It was kind of worldwide. A lot of renters could not make their rent payments. If you have a lot of debt, like 1.2 billion, and all of a sudden the rents decline, the amount of rent you collect decline, it can become harder to pay the monthly payments on the loans. Compare that to owning the property without any loan, right? Then there's never an issue of can you make the loan payments, because there are no loan payments. So if his loans are adjustable interest rate loans, and I would imagine some of them probably are, this could be a huge increase in the loan payments. If you have an adjustable rate loan you took out, remember when mortgage interest was, 2.5%, 3%, and then in 2022 it shot up, it more than doubled. So if you had adjustable interest rate loans from before interest rates skyrocketed, and then they adjust and they double, it can become much harder to make your loan payments. It becomes harder to pay your loans, the monthly payments. So again, if you didn't have the loans, it's not an issue. It doesn't matter what interest rates are. You don't have any loans, right? So another example is, so just to wrap up, I think that Kiyosaki, if this is actually true, he owns 15,000 rental units and he's got this much in debt. I'm not sure how you could sleep well at night, because the assumption is rents are not going to decline. And under a lot of different economic conditions, COVID, the great financial crisis, and other situations, including a possible recession this year because of the trade wars, rents can definitely decline, and then it becomes harder to pay the loans. Okay, so another example, Dave Ramsey. We all know who Dave Ramsey is. A lot of people are not aware that Dave's current career was not the first career he had. The first career he had, he was a real estate investor. In his 20s, he built up his portfolio. This was in the 1980s. This was a while ago, 40 years ago, okay? 40 years ago, he owned $4 million worth of rental properties. This was in the mid-1980s. $4 million in the 1980s is a lot more than 4 million is today, because this is 40 years later. Back in the 1980s, that was a lot of property, okay? And a lot of that was borrowed money. So did he really, and that's why I put double quotes around owned, because who really owns the property if you have a lot of debt on the property, if you're using a lot of leverage? Do you really own it? You can find out if you stop making the loan payments. The real owner will show up, right? So there was a recession that occurred in the late 1980s. In the late 1980s, the savings and loan crisis occurred. There was a big recession. The president at that time, George Bush I, did not get reelected, and a lot of people blamed that on the recession that occurred. Dave Ramsey, well, what happened is the banks failed. A lot of banks failed at the end of the 1980s. Okay, banks failed. New owners bought the banks. The same thing happened in 2008 and 2009. And the new bank owners called the loans. When a bank calls the loan, it means pay us back everything now. You have to pay it all back now. No more monthly payments. Pay back the total balance of the loan. And Dave could not pay the loans back. He was not in a position to pay back $4 million worth of loans, right? And the banks seized all of his rental property. He lost all of his rental property. So many years of work, and that was probably his source of income, his rental income. Went away, just disappeared. And that's when he started his second career. Dave's second career became what we know him as today. Do not borrow money, because of what happened to him. He lost all of his wealth. You know, he saw himself as wealthy with all that property, but the reality is when he couldn't make the loan payment, when the banks called the loan, the real owner showed up. And it wasn't Dave, it was the bank. The bank, if you borrow money, you are no longer the real owner, right? Okay, so that's real estate. A couple of examples of real estate. Kiyosaki is, treading a fine line, expecting no financial crisis to occur, in my opinion. He's really stretched. Dave lost everything, so he's not borrowing money anymore. So he's probably in a good place. Okay, so here's an example of buying stocks. You know, getting rich with debt, buying stocks with debt. How do you do that? So, and by the way, I've done all this. I bought property with loans. I bought stocks with loans. When you borrow money to buy stocks, hedge funds do that. Other investor types do that. It's called a margin loan. A margin loan is granted by the brokerage that holds your stock. In other words, you borrow money from your broker, you buy stock. The stock is collateral for the loan. If something goes wrong, the broker has the stock to take care of the loan they gave you. So if the stock price, the asset price drops, the broker will say, it's the same thing that happened to Ramsey. The bank owner called Dave's loans, called the loan, pay us now. If the stock price drops, the brokerage will say, pay us now, put in more money into your account. And the reason is, when you borrow money from the broker, when you take a margin loan, the broker allows only a certain percentage of the stock's price to be borrowed money. They want you to have skin in the game. If the stock price falls, they want you to put more money in so that your percentage ownership of the stock remains the same. If you cannot, and that's a margin call. When the broker says put in more money, if you can't make the margin call, the brokerage will seize the stock and sell the stock to pay back the loan. It's the exact same thing that happened to Dave. The banks called the loan, pay us now, or we're taking everything, right? So getting rich with debt. It can work, right? It can work. And is it a question of timing? For example, let's see here. In 2020, and then in 2008 and 10, between those 10 years, timing-wise, that might have been a good time to borrow money. Interest rates were low, and you could get rich, and there was no economic disaster that happened between 2010 and 2020. So timing-wise, borrowing money, getting rich with debt can work if you fall into one of those time periods. If you don't, like what if we have a recession this year sometime? Like some financial people are predicting that we're going to have a recession this year. If you own real estate, rental real estate, and people can't pay their rent, and you must make the loan payments, so are you going to sleep well at night? It's a question. It's a matter of timing. Borrowing money, and it's the same with stocks. If you borrow money to buy stocks and the stocks go up, then you're good. You can sell the stock, pay back the loan, and keep your profit, right? But it's you're dancing on a razor's edge. It's a risk. I mean, the asset itself is already a risk. Buying real estate is a risk. It could go down in value, even if you don't borrow money to buy it. Stocks are a risk. They go up, they go down, even if you don't borrow money to buy the stock, right? So you're already taking a risk by investing in an asset. by trying to get rich with debt, with leverage, you're layering on an additional layer of risk. And I'm not so sure that it's worth it. If you own stocks free and clear, and the stock market collapses or falls like we've had recently, you're not going to get a margin call. You're not going to lose your stock. You can wait patiently for the market to recover, which it has done recently. The market has been recovering. Stocks have been going up. Same with real estate. If you owned real estate in 2008, 2010, when the crisis hit, and a lot of us did, right? A lot of us owned property when prices just collapsed, right? But if you could make your loan payments, or if you had no loan payments, you could wait patiently for the market to recover, and it did recover, right? So the market recovered. So the moral of the story is getting rich with debt is a second layer of risk. You're buying an asset hoping the price will go up. So that's one level of risk. The next level of risk is borrowing money to buy that risky asset. So you've got 2 orders of magnitude of risk when you borrow money to get rich. I'm not sure if it's worth it, because these things are out of your control, right? You cannot control for a 2008, 2009 crash. You can't control the government shutting down the economy in 2020. It's just out of your control. You could do everything perfect and still lose everything. If you think about Dave Ramsey, he owned all this real estate, all this rental property. It was not his fault the savings and loan disaster happened, but it cost him all of his wealth, all of his property. If he had not borrowed money to buy those rental properties, he wouldn't have the second career right now. He wouldn't be telling everybody don't borrow money, because he wouldn't have borrowed money back then. So leverage is risky. Sometimes you need to borrow money for expensive assets like a home, rental property. The key is this. You want to make sure you have enough cash reserves to sustain yourself if something really bad happens. As an example, Warren Buffett, Berkshire Hathaway, right now they have over $300 billion in cash. Okay, that's a lot of cash. And if you think about it, having that much cash is an investor's worst nightmare, because cash does not earn very much of a return, right? Why does Buffett do that? First of all, he's got insurance companies. He may need the money to pay out insurance claims. Second, if something bad happens after, because he's retiring, if something bad happens to Berkshire Hathaway, having a large cash pile can help them get through a storm. For example, if Buffett passes away and there's a lot of turmoil, having a huge cash reserves, $300 billion, I think it's $330 or $340 billion they have in cash, that can get you through turmoil, right? So if you're going to borrow money, don't overdo it. And some of these people, Kiyosaki, Cardone, Logan Rankin, I kind of read about what they're up to. I would not be comfortable being stretched that thin with other people's money, with borrowed money. I would not feel comfortable with that. It's not important enough to put everything at risk, right? Because Ramsey lost everything, and these guys could lose everything too. It could be a domino effect. If you lose one property, if conditions are that poor, right, maybe you can lose more than one property. And there's something to be said for the way Warren Buffett built up his wealth very incrementally, very slowly, right? He started in the mid-1950s, and he just did not over leverage. He never got himself into a position where he lost money. Buffett always says, when you're investing, rule number 1 is don't lose money. And then rule number 2 is never forget rule number 1. So if you're going to borrow, if you're going to use other people's money to try to get rich, have cash reserves and do not overdo the leverage. Like having 10% loan to asset value is one thing. Having 40%, you're just asking for it. So anyways, the biggest example, the most important example is what happened to Dave Ramsey and how it totally changed his life. So take that to heart. If you have any questions about this, please post in the comments. I really want to thank everyone for watching. Best wishes to everyone. Have a great day.